Hey, hello and good morning, everybody. Hi, my name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com. And today is Friday, ladies and gentlemen, and welcome to the last trading day of this week. And well, it was okay, I would say. But look, we'll dig into all that in a bit. Stay tuned. Hopefully, you'll enjoy the session, and I'll see you in a bit. All right, ladies and gentlemen, hello and good morning. My name is Darius Anucauskas and I'm the Chief Market Analyst here at Markets.com, and today is Friday. Ladies and gentlemen, I hope you had a fantastic week. I hope all the trades were running well for you. Look, before we jump into the charts, we're going to talk markets, of course, but before we jump into all that, let's quickly have a read through our risk disclaimer. So yes, the content we produce does not constitute investment advice or investment recommendation and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. I'll give you a few seconds to read the rest. I'm not going to disappear anywhere. Also, I'm going to put my usual good morning in the chat room. Good morning, everyone. There we go. Nope, no, we don't go. Now, there we go now. So yes, ladies and gentlemen, like I said, it's a beautiful Friday. I hope it is for you. It's a beautiful start. It's the market is, well, going crazy a little bit, I would say, as every week. Nothing new, to be honest, but let's try to make some sort of sense out of it. Also, just before we jump into the charts, just a quick mentioning of our Markets.com website, which you can always check out for more information about us. If you have any questions, reach out to us. We'll be more than happy to assist. Also, a quick mentioning of my webinar, which is going to happen on the 30th of October. Yes, this is the third episode in the series of webinars where I'm talking about the most popular indicators and applying it in real life market action on our demo account. So basically entering real life trades, and just to see, the whole point here is to see, how can we rely actually on those indicators? Are they useful? First we did MACD, and then we did RSI. Now we're going to do Bollinger Bands. So hopefully you'll enjoy it. Yes, you can find the link in the description of this webinar. Ladies and gentlemen, let's have a look. Economic calendar. First of all, let me refresh it, so that we would get the most up-to-date data. So this morning, what did we get? We got the business NZ PMIs that came out on the lower side. Well, actually, no, they came out as previous, 49.9, so a bit of in contraction territory. Then we got the Japanese PPIs. Now, this one's interesting. So it came out the same as previous at 2.7. However, overall, we are a little bit on no. Let me just do this. There we go. We are a little bit on a kind of on the lower side. So look, the bank has it on the lower side. I mean, relatively to where we were, in the beginning of this year. The Japanese inflation, the Bank of Japan inflation target is around 2%. So we're kind of a little bit above this one here, but certainly we're watching this very carefully because, again, we know that the BOJ is planning to do a rate hike at the end of this month. However, the new leader, the new elected Japanese leader, Sanae Takaichi, she's kind of a little bit in favor of cuts. So we'll see how that plays out, to be honest, with the bank at the end of this month. I mean, are they going to just keep the rates, not pleasing anybody, just keep the rate unchanged at plus 0.5, or actually they're going to stick to their words and go for that a rate hike. Anyway, we'll see, ladies and gentlemen. Of course, we'll see, but certainly for now, we're watching this one very carefully. The inflation number is still manageable, around 2.7%, but the forecast was at 2.5. So look, maybe we'll see a little bit of positivity in the Japanese yen, but again, I'm not saying anything yet. We'll check that out in a bit. The big data set to keep in mind for today, it's the unemployment numbers from Canada, and if you are trading something Canadian dollar related, so keep that in mind. Look, we were supposed to be getting the U.S. labor numbers, the NFP, the unemployment, but the U.S. government continues to relax and continues to have a day off or a few days off, if I can put it this way, of course. But look, now of course they're debating, they're making a bit of a show, and they cannot agree on this and that, and the government is shut down. So look, I mean, we don't agree on a lot of things very often, and basically we do not, and in general, in many other countries, politicians do not agree with each other, right? But nobody shuts down the government. Still, the data comes out as expected, and business as usual normally. But anyway, so for now, like I said, the only thing that we're going to keep an eye on today from the US is going to be the Michigan consumer sentiment, which is the preliminary number, and that one is expected to drop a little bit. Let's see how that's going to play out, of course. And kind of that's it. But I think the main topic which you need to keep on monitoring is are the geopolitical tensions still, and also the whole AI. Honestly, like if everybody AI is everywhere. AI is just like it's already becoming like a thing that annoys everybody, and it's just like it's gonna help us this way, it's gonna help us that way. No, the only like side that is going to help, of course, mostly it will be the big companies, or those people who decide to create something with AI in terms of where you can basically cut jobs. So yeah, that's the progress. So I'm not, like I said, don't get me wrong, I'm not the skeptic of AI. I do use it myself still, let's say, just for simplistic, tasks, and like the same, raising questions and stuff like that, just, playing around. But the thing is that, yes, on one hand, it's very helpful. However, on the other hand, if you're looking at search engine kind of capabilities, like how it's, delivering the message and everything, let's not forget that it can be biased, and it gives you only one answer, right? However, when you search it yourself, you have multiple choices to investigate, research, and have a look at. But with that one, it just gives you one answer. So always remember that it could be biased. It could be just shaping your point of view. Anyway, so ladies and gentlemen, like I said, keep your eyes on the economic data, keep your eyes on the geopolitical tensions, keep your eyes on the whole AI, and most importantly, keep your eyes on the companies, the tech companies, which are right now booming, and .com. I don't know. And it certainly kind of looks similar, but again, maybe not with all companies, but certainly there are companies which kind of could fall into that category. Anyway, look, let's jump into the stock market here, and the first index I want to look at is Nikkei. So basically, Nikkei is reversing from its all-time high, and this one is drifting a little bit to the downside here. So look, what can I say? For now we are. Oh, sorry, where my camera has gone. There we go. So for now we are. Still somewhat positive, to be honest, and we're still looking for that upside in a way. I mean, this little structure right here. Okay, with this little structure, now this is where the interesting bit comes in, and this is what I talked about previously when I love this formation, and I will explain which one. A lot of times I talked about the formation when we have a big decline and then a gradual decline, and then I say to you that, look, whenever we have something like that, then there is a good chance for a push higher. But in this case, we have the opposite. A big move to the upside, and then a gradual move to the upside within a possible kind of a rising channel. Maybe let's actually see what's going to happen here. And basically it's kind of like this, something like this. So if we try to grab these peaks here for now, and we do the just a parallel channel here, then you'll see that this is the room, kind of, this is the area for maneuverability. So what could happen here, we could see this move to the upside here, this gradual incline, but then maybe, like I said, a drop lower. So I'll keep this on the chart. Don't get me wrong. This is not something like, 100% or something. In general, nothing is 100%. But this is just an idea for you to examine and keep in mind. So let's see if this is gonna work out or not. But hey, hopefully it will, and we could see a little bit of a retracement back down. But in general, the trend is to the upside, the strong trend to the upside. Looking at this, I mean, look at this hyperbolic move. I mean, we are at historic levels. Initially, I remember when we were back in the beginning of 2024, like I was talking about Nikkei, and I said, look, wow, this is the barrier to watch. This highest point of 1990. And from here, you see, like we kind of, we were rallying towards it, and then we reached it at the beginning of 2024. We overcame it. We bounced around here, and then we dropped below it. And well, I was April drop, but then we rallied once again. Look at this spectacular move by Nikkei. Eventually, there will be a red, or in this case, in my situation, white candle, and we will go down. Honestly, like you cannot just continue rallying like this. I mean, yes, great, October, fantastic, but if by any chance at the end of October we start shifting back up or back down, well, this would be a very nice big candle here to the upside, but with a big tail to the upside, with a smaller body with a bigger tail. Again, theory, idea, just throwing it out there for you to digest and have a thought. But at the same time, I cannot really stick to that idea. Why? Because, well, we don't really have any clear message, or let's say clear indication of a possible reversal. So what can I say here? I would say that I would say it this way, that maybe this idea could help it out. Maybe just maybe that we could see the a shift this way. Actually, ladies and gentlemen, let me just bear with me one moment. I want to try something out here while I'm doing this. I mean, I just kind of had a thought. I want to change the screens here a little bit. Let me just see if what's gonna happen here. Right, okay, just a second. Hop. Let's do it this way. Okay, sorry for going blank there a little bit, but I want to try something new here. I want to see if this is gonna actually be nice or not. But yeah, sorry for going blank there a little bit. You can still hear my voice, but there we go, and there we go. Okay, I think this could be an interesting one. Let's see if this is gonna make any sense. No, it's not. It's not really comfortable like this. Okay, right. Okay, so yes, apologies. I'll return the screens a little bit, because what I did, I just flicked the screens a little bit. Just a second. Let me just go back to my normal, usual thing, because I think that I'm trying to make my life a little bit easier here. But I mean, for you, it probably doesn't change anything. But for me, it's a little bit of a change of screens here. Let's see. There we go. So, wrong. Yes. There we go. I think I was capturing my OBS. Anyway, ladies and gentlemen, so what I'm watching here, like I said, it's the interesting situation here on Nikkei, and in general, in overall in the markets. We are, like I said, we're hitting these all-time highs everywhere, right? And as much as I would like to support the the further continuation to the upside. And in general, I am. And in general, I'm not saying that I'm becoming very pessimistic or anything like that. No, no, come on. Let's just be logical a little bit. Let's face the fact that there could be a little bit of a retracement back down. So again, maybe I'm not saying I'm not talking about like a major sell-off or something like that. No, but a little bit of a correction, yes. So what I'm looking at here, I'm looking at the monthly candle for sure. I want to see what's going to happen here. I want to see if this idea will work out or not. This the one that I just expressed. So where we could see a bit of a move within the rising channel here, potential rising channel, because it's not confirmed yet. And then yeah, we'll go from there. We'll see if if this confirms, and if we do see a movement here inside the rising channel, then a bit of a drop back down here could be possible. Let's jump into China. China is retracing back down, but looking at Shanghai Composite, we are holding above this 3,888 zone. So it was a good barrier, and it's still a good barrier, or should I say, no, actually, it was a good barrier, a good resistance barrier, and we overcame that. And I said to you that if we do clear it and we stay above it, I'm going to continue targeting the upside. So I'm going to stick to that. I'm going to stick to my words, and I'm going to continue aiming to the upside as long as we stay above this hurdle. If we suddenly start falling below this little hurdle, then yes, there is a little bit of a chance for a larger correction back down. Let's jump into the US Dow Jones Industrial Average. Okay, so this is the main index. It's not the cash or the futures. No. It's showing that it's closed right now. So this is where we closed yesterday, 46,358. Yep, after reaching an all-time high last week, by the way. Since then, we have been drifting a little bit lower. Now, I said this in my webinars on Monday, on Tuesday. So on Monday, I said, on yesterday, I said a bit of profit taking maybe. This is what I was referring to, and this is what I was saying, like kind of maybe this is what could happen, because we had a great run, and in general, if you look at separate stocks like AMD, I mean, this one's to the moon, and yesterday it retraced a little bit, but in general, yes, look, NVIDIA rallied all-time high. Okay, companies like these are still kind of subdued here. Google as well, these guys are kind of holding off from going there, but big, like everything is AI. Everything, if you have something AI or cloud, Oracle, for example, I mean, we had a good run on Oracle. It, exploded higher. Companies like CRWD, I think this way, CrowdStrike, yep, there we go. These companies, all these AI, data companies are exploding right now, and they're, we're seeing them rallying like crazy. But eventually, come on, like look at this. This is a monthly chart, right? I'm gonna put the another one. Let's say forgot the ticker, Rigetti, something like that. RGTI. There we go. This one, I mean, these companies, they're coming out with announcements of AI and everything like that, and I think it's a bit of a short squeeze, so it cannot, like Big Bear AI. I think there is the company Big Bear, something like that. Big Bear AI, BBAI. There we go. These companies, then you have your general AI, C3 AI companies. Okay, this one. Sorry, this one. No, this one had a move. It was back here, but then it kind of, it lost touch. What I'm trying to say is that, look, AI is great in certain fields, okay? To see how big companies are just pouring cash into AI, like, you have your Meta. Oh, by the way, Meta. Okay, Meta is kind of holding on here. So big companies are pouring cash, OpenAI, NVIDIA, AMD, all these guys, Meta, they're announcing how much money they're putting in. JP Morgan as well, and this whole thing is kind of stuck in this whole thing as well, because they're pouring money, and everybody's trying to reshape the markets, industries, and blah blah blah. The only problem that everybody, I think, there was one problem that nobody kind of understands the final result. I mean, okay, there is a vision for sure, but nothing is like, you cannot really feel it yet. So, we're pouring money. There's like lenders involved who are, you have your venture capitals, private equity, which are pouring money into AI. Everybody's jumping in on the bandwagon. But there's no clear kind of result yet. And yes, I know that people might say, but this is like part of investing, right? I mean, you sometimes don't know the result. That's why you take the risk and you invest. True, I do agree with that. However, there this time for some reason feels a little bit out of touch with reality. So anyway, but that's only me. That's only my opinion, ladies and gentlemen. I don't want, like I said, I don't want to be the pessimist or something like that. But just it's just that maybe a little bit of caution is needed or something. Again, like I'm a risk manager, and I used to be a portfolio manager, and basically when something looks too good to be true, it's too good to be true. Okay, period. Anyway, let's have a look at Dow once again. Let's have a look. Let's see what's happening here. So for now, I'm seeing a hold up near the 20-day SMA here on the Bollinger, inside the Bollinger Band. By the way, this is the topic that I'm going to be covering in the webinar, so tune in. Yep. Tune in. The link is in the description. Yeah, let's see right now if we can drop below that. If we do drop below this, I'm leaning towards the downside, ladies and gentlemen. For me, the upside scenario needs to be, well, it needs to be a break of the current all-time high, and then I'll do something about it. S&P 500, we had a great run yesterday. We created a new all-time high, and then we drifted back to the downside. Let me just grab one of these lines here and recycle. Yep, always recycle, ladies and gentlemen. Here's a hidden message for you. 6,764. That was a new all-time high here on the S&P, and we retraced back down. So, look, people are now talking about 7,000 on the S&P. However, that is, I don't think that this is like short-term projection. I think more maybe like medium-term, so maybe a little bit of retracement first before kind of maybe targeting that 7,000 zone. That said, we can always, always aim for higher levels, 7,000, but then we reach the 7,000, then everybody says like, hey, maybe 8,000, So that's what I'm saying. So be very careful at this point. Yes, appetite rises as you eat. And at the moment, I think let's not exclude a possibility for retracement. Looking at Dow, we're seeing, this one is kind of reacting a little bit earlier than the S&P or NASDAQ. NASDAQ is still holding on here. Well, we understand why. Technology. Everything is surrounded by technology, and everybody's, into AI and stuff. So that's the hype. However, we know that NASDAQ tends to kind of fall the hardest in a way. So yeah, one of the hardest ones. So anyway, I'm not saying anything yet, but certainly watching very carefully. Yesterday we create no, we didn't create an all-time high. We came very close. It was on Wednesday that we created an all-time high, and yep, we got the move here. So long story short, if I'm looking for some higher levels, I need a clearance of the current all-time high, and then I'll go from there. I think on the cash index, we already kind of overcame that barrier. But look, I need on the main index, I need this move on the main and during the main market hours. German DAX, there we go. Created a new all-time high, ladies and gentlemen. We created a new all-time high, and this is one of those moments that I keep on talking about. Look at this. We hit a new all-time high, and then we closed below the previous. And ooh, this to me sounds like a little bit of a bearish indication, but hey, not trying to be a pessimist, but still this could run higher, don't get me wrong. But certainly I'm keeping an eye on the weekly chart. I want to see where this weekly candle will end, or I should say where the body of this weekly candle will finish. If we stay above this hurdle, then great. Okay, more upside to come. But if we struggle to stay above it, I'm considering a move to the downside. The FTSE 100, and the FTSE 100 is also at an interesting level, and certainly we went for a new all-time high. We rallied sharply yesterday. Today we continued. We reached my 61.8 on the Fibonacci extension here. So I talked about this, ladies and gentlemen, and there we go. Boom. So okay, look, this is subjective. The Fibonacci extension is subjective because again it's drawn this way, because maybe we can, you know, it's in a weekly chart, sorry, on a daily chart it looks like this. This is a little bit maybe better, but certainly this is not picture perfect. Maybe it's, like I said, let's try to find maybe another one, because maybe this is just not the, you know, not the best way of drawing it. However, again, what is the best way? You know, should we take it from here, from this low, or from that low? So probably let's jump into monthly and see what we can do here. So, you know, we draw it from this low right here, right? Then we will draw it to, okay, we can draw it to this, but then it's a little, it doesn't work out this way very well. So maybe, like I said, it becomes very subjective, something like this. No. So maybe to the latest one here, you know, and draw it this way to the highest point of March of this year, and then to the lowest point of April when we had that big decline. Then you'll see that we are near 50% on the Fibonacci extension, which is drawn this way from the lowest point of 2020 to the highest point of March of 2025, and then the lowest point of 2025. And this way, yeah, okay, then we'll see that maybe we're, you know, getting a stalling moment here, because the next step for FTSE 100 is actually the 10,000 if we look at it from this perspective. And it's also a nice little psychological number there as well. The 10,000 zone on the FTSE 100. Look, is it possible? Yes, it is possible. Am I still? Do I still believe that the market could go higher? Yes, there is still a chance, but maybe a little bit of retracement here could be nice, I would say. So let's jump into another index, which is the dollar index, and this one is, well, enjoying life. Yesterday, if you remember, I talked about this one, and also what I picked up here on one of my videos here on not yesterday, but on Wednesday, I talked about DXY and can it steal the thunder from gold in the near term? Well, it seems like it is doing that, and well, there we go. Great, wonderful. You know, we're pushing to the upside here. We're pushing higher, and I think that there is a chance for this one to drift further north. However, if you remember, yesterday I talked about, yesterday on Wednesday I talked about this DXY, and I said that, look, one of these levels here, right here, the 23.6 on the Fibonacci retracement, which is drawn from the highest point of 2025 to the lowest point of 2025 right here, and perfect. Look at this perfect hit. Now this is one of those moments where I will stand ground for the Fibonacci, which I have drawn here, and you know, normally it is subjective, but for this one I like this. This one is very clear, and there we go. It's you know, acting very nicely here. Look, after this, the next target in a way should be the 38.2. However, the problem that we have here is the psychological 100 zone. So I think that could be the case. We could end up traveling there, but let's be a little bit on the careful side, on the cautious side, because hey, you know, we're currently getting a hold up moment here near the 23.6, but the next target for me is not the 38.2. It's the 100, and maybe slightly above that, the 100.2. Why? Because we have the 200-day EMA right here near that area coinciding, and that's, yeah, this one's on the daily chart. So, ladies and gentlemen, let's jump into the Forex world. This dollar index casually leads us into the Forex world, and well, before I even click the chart of AUDUSD, you'll probably understand what you will see here. You will see a move to the downside, right? So there we go. We had a move to the downside. We, you know, drifted lower. And what I said to you that on this specific pair, I'm not really touching it until I see, a clearance of at least the 0.6520 on the downside, or a push above the 0.6629 on the upside. Why I don't get like a clear signal anywhere here. Even on a break of these two levels, still there is a problem with the downside line and the upside line, so these are a little bit in the way. So hey, what can I say? For now, it's this. For now, it's this little situation, which I think we need to take into consideration, right? I mean, so if you're trading AUDUSD, sorry guys, at the moment there's not much clarity on this one. AUDNZD, now this one I like. Yes, NZD this week is falling. Why? Because we got the interest rate decision from from the RBNZ, and that happened on Wednesday, and the bank, I already talked about it. I even did a little video on the RBNZ before the interest rate announcement, and basically what I said, that we could see a 50 basis point cut. I mean, will it be a 25 basis point or a 50 basis point? Well, we got the 50, so it's weakening the New Zealand dollar, and yes, this is what we're seeing right now. We're seeing this major rally to the upside, and look, I said before, and I'll say it again, I'm aiming for this highest point of 2022 near the 1.1490 zone, and then we'll take it from there. AUDJPY, one of my favorite ones right now, my risk on, risk off monitor. We're seeing a little bit of a retracement, and we're seeing a little bit of a reversal signal. So hey, if that's the case, maybe it could lead the stock market for a little bit of a profit-taking mode, into the profit-taking mode, and maybe we could see a little bit of a move back down here. So let's not rush into things, of course, but a little bit of retracement here could be possible. Let's see what my beloved Fibonacci level is saying here. Boom, there we go. Look at this. We did already the 23.6. Let's see if we can do the 38.2. In general, am I getting very bearish here? No, because there is a chance for this one to rebound from, it could drift lower, it could travel to that 99.17 zone, but in general, this is what I'm keeping an eye on. So it could hold above this hurdle, and then yes, we could see another push to the upside. EURUSD, certainly a very interesting one. We understand why, because again, the XY is enjoying the moment. The euro is on the weaker side because, well, we understand, France is the issue right now. There are concerns, what's going to happen today. Apparently, we should be getting the new prime minister of France by the end of the working day, European working day today, I think. Yes, that's what the announcement should come. But anyway, we'll see what's going to happen there. So basically, we're keeping an eye. This is what you need to keep an eye on: geopolitics, politics, and tech. This Friday. So yeah, look. For now, everything's not looking very good for the EURUSD. We dropped below the 100-day EMA. We're currently testing the 100-day EMA again, and we're struggling to push back above it. So in a way, there is a good chance for this one actually to drift further south. In terms of the upside, yes, a break of this downside line is probably better option. However, even better option for me would be a push above this 1.1750. However, I do understand the further we move away from this hurdle, the more it distances, well, logical, duh, right? But so we're looking for something like a little bit maybe closer, like a closer breakout, and this downside line kind of comes in perfectly. EUROJPY, now this is where the euro is still somewhat on the stronger side. However, we're seeing a little bit of a retracement. That said, look, we reached the 177.91 zone, and I'll show you what that level was in the past. If I need for this one, I need to jump into a monthly chart, and there we go. This is what I'm talking about. This is the highest point of 1991, ladies and gentlemen. Look at this. Boom, we reached that. And the highest point of 1991, for me, the next target is the 188. But let's not rush into things, okay? It's a good target, the 188. That's the highest point of 1990. So can you imagine? These are the levels that we're reaching right now in general. let me wait until I get to silver. Yeah, for now, it's an interesting moment here. So let's see what's going to happen next. If we can overcome this 177.91 zone, then great. More buyers could join in. So but I do accept a fact. I do accept the possibility for a larger correction, maybe. But again, that larger correction, if we stay above the 175.43 zone, somewhere around here, yes, I'm going to continue targeting the upside. This is what I'm talking about here. So this is the highest point of 2024. If we stay above it, then yes, I'll continue targeting the upside. Euro NZD pushing nicely to the upside, ladies and gentlemen, pushing higher, and certainly this 2.03 territory is the barrier that I'm watching here. The highest point, the current highest point of this year, we reached it in September, at the end of September. Like I said, for now, it's pushing back up. It's holding above the midpoint here in this Bollinger band, so above this 20-day SMA. So for me, to be honest, to get a little bit more excited with the upside, a push above this barrier here, the 2.03, is required. Let's jump into GBP. Let's jump into GBPUSD, and we are at a very important area of support. I talked about this, ladies and gentlemen. I warned you about this on Monday, on Wednesday. I said, look, keep your eyes on the 200-day EMA. It was a good area, and it still is a good area of support. You can see historically here, but is it going to be this time? If the US dollar continues to gain traction, gain momentum to the upside, it's pretty straightforward. We could see a little bit of a a move here to the downside. I'm not saying that this will collapse suddenly or something like that. No. I'm gonna aim for what I'm gonna aim for is gonna be this. I'm gonna aim for this little hurdle here, this lowest point of August of this year, near the 1.3140 zone, and then we'll just kind of take it from there. So this is going to be my target. So for now, long story short, yes, we're keeping an eye on the 200-day EMA. It has potential, the pair has potential to bounce from it, but third time lucky, or the third time will be the break here. Third time lucky for the bears. Let's see. Let's see if that's going to be the case. GBPJPY, beautiful correction back down. We fell below the 23.6. We came close to the 38.2. I think it's still possible. Look, I also said to you, like, keep your eyes on. I said that I'm going to pick up on the Japanese yen because the PPIs have increased, and this is playing out positively for the Japanese yen at the moment, and I think that yes, we could still see a bit of a strengthening moment for on the Japanese yen against some of its major counterparts. But again, the USDJPY is a different story. I'll take a look at that one. So for now, yes, we're seeing this movement here. Look, the Japanese yen could strengthen right now, not because of what's maybe happening in Japan or anything like that. No, it's mainly on the story of the global equities, in my opinion. If those retrace, and we see a bit more profit taking on in indices, then the Japanese yen could strengthen, because again, everybody's searching for safe havens. Gold right now is interesting. We hit new all-time high on gold, and silver also all-time highs. So everything is kind of pointing more towards the up. Everything is already overbought, and everybody's looking for value. The US dollar presents that, and the Japanese yen could also do that. So in that case, let me jump into USDJPY very quickly. So there is a big battle right now happening. So USD started picking up the pace. I'm not saying that it's gonna strengthen very strongly, no, but there's room for retracement to the upside on DXY, on the US dollar. However, at the same time, Japanese yen, if we see the stock market moving a little bit to the downside, we could see Japanese yen shifting, to the downside as well. And then you have a battle between the two weak ones, which are at the same time becoming slightly stronger. So who's going to outpull who. So it's going to be an interesting battle here on the USDJPY side. So keep that in mind. USDCAD, of course, we're watching this one very carefully today. And if you remember, on Wednesday, I said to you, I am watching this 1.40 16 zone, and in general I was watching the psychological 1.40 zone. I said that's my next target. There we go, boom, fantastic, good, great touch. And of course we're watching the job numbers. So look, for now the expectation for the unemployment rate is to see an increase by 0.1%. Employment change, that's what I'm curious about, because again, it has been in negative territory for the past two readings, for the past 2 months. Before that, in July, it came out in positive territory, but before that, it was again in negative territory. So I want to see what's going to happen here. Are we going to see another bad number here in the red, in the negative territory, or actually is this going to save, or the statistics bureau is going to save the day and show us something positive? But at the moment we're seeing a forecast of 5K. Well, not much, but something, right? Anyway, and if we do get some positive numbers here, maybe Canadian dollar could strengthen temporarily against the US dollar. However, I think that still the main topic here that dominates is this current little strength of the US dollar and oil. Because oil right now is, I'll show you oil, I'll jump into commodities in a bit. USDCHF, now this one's an interesting one. I talked about it. I warned you on Monday and Wednesday. I said, look, keep your eyes on the 0.8014 zone. Boom, pop, there we go. My next target here is the 100-day EMA, to be honest. That's what I'm going to aim for. At the moment, it's around the 0.8085. I think it's a good target. In general, 0.81 is a good target. I would like to see a touch of that one, but hey, I'm not in a rush. I want to go slowly on this one, but in general, I would say this way that USDCHF is having a good week this week, just purely because again we're seeing DXY rising, and this is the example I wanted to show you, ladies and gentlemen. On a weekly chart, I think it looks better. So you remember I talked about Nikkei, right? About this situation with this formation here. I said that when we have a sharp increase and then we have a gradual increase, then we get a little decline, because this is kind of the opposite of that story when we see the big decline and then the gradual decline, and then we see a pop higher. And this is exactly what I'm seeing right now on USDCHF, and basically this is the story that I'm watching right now. Look, we broke this downside line. It's a tentative downside line, don't get me wrong, but certainly, is this a falling channel or is it more of a falling veg? Well, if it is a falling veg, then yeah, this is looking a little even more bullish, to be honest, for me right now. And if we do get a clearance, we already got the clearance. Sorry, I mean, what am I talking about? We already got the clearance. So this in a way is opening the door towards a possible move, maybe towards that 0.82 zone. So again, potential good target. Let's see if this is gonna stick. I'm watching this weekly candle here. It's a good move here, I mean, to the upside. Look, if we let's very simple, if we do stay above the 20-day SMA here on the in the Bollinger Band here, I will continue targeting the upside. If we do stay above that hurdle at the end of this week, then next week could be a little bit more interesting. Let's see. I'm not going to rush into things, but certainly watching that 0.8300 zone, I think that's the level to watch today. And we haven't been above the 20-day SMA since when? Since the beginning of this year here in March time. So now we're picking up pace a little bit. So yeah, like I said, 82 looks nice for a little bit of retracement. And then we can, retrace back up here, and then we can drift back down. Hey, why not? And now we finally come to my commodities. I mean, we're going to talk cryptos as well here, but yes, gold. Look at the retracement. Okay, first of all, weekly candle, right? Look at this. We are retracing like crazy right now. After hitting a new all-time high yesterday, was that a case? Wait just a second. Um, 50, we came very close, sorry. But anyway, that's the 4,059 zone. That was reached on Wednesday. So after we hit a new all-time high, on Wednesday, we retraced back down here. We are now, we're falling back below 4,000 zone, and everybody's like, maybe this is like a little bit of a breathing moment for the bears here. However, look, we do have some room for a larger retracement back down towards this upside line. In general, could be a nice option, especially going maybe into next week. But let's not rush into conclusions yet. For now, I mean, maybe this could be just a little brief moment here. In general, yes, of course, we have seen like how many weeks? 1, 2, 3, 4, 5, 6, 7, 8, 8 weeks in a row when we when we're seeing here, like this positivity here. On the monthly side, I mean, this has been overextended. Look, I talked about gold a lot already in the in my videos here, and recently I've updated here I made an update on the this week on gold. Is the 4,000 final stop or just a pit stop? So in general, look, both sides are going to be correct. We still could go higher, and it's maybe time for a little bit of retracement. So which one's more correct? In general, I would say a little bit of retracement could be nice. So if we are, let's say, measuring this little rally here from mid-August, let's say, to currently, then you'll see that the 23.66 sits perfectly near my upside line. And in a way, for a little bit of a corrective move towards that area would be nice. So basically the arrow should be like this. And yeah, like I said, this is a good target. This is a good level. And maybe we can end up testing that 3,882. But then the question is if we can break that or not. At the moment, I would say we have rallied. I think we could bounce around here a little bit. I think maybe we could actually create something of a range even. We could start moving up and down, basically oscillating around the 4,000. Because as you can see right now, if I put a floor here near the 3,941, so the 4,000 level becomes somewhere in the middle between the two, and basically this is what I'm looking at here. So if we could see a rebound from this territory, we could start oscillating around that 4,000 zone. So basically up and down in this little range. Actually, let me get rid of the Fibonacci for now, and let me just put a little rectangular box here just to show you what I'm talking about. So this is what I'm talking about. See, we could start moving like this, up and down, and the 4,000 will be somewhere in between, in the middle, bang on in the middle of this formation, of this kind of little possible range. So keep that in mind, because at the moment the big story is silver. Silver yesterday rallied, hit the 50, and it hit the 51, and it overcame the 51. And if you see, I have a line here, but that line is actually more visible on the monthly chart, because what I talked recently and what I said to you guys, honestly, silver, we're going through historic moments. We're going through some historic moments. Look at this move here. 1980, silver reaches this one. 2011, silver reaches this hurdle as well, and we are now creating a new all-time high. Yesterday we did that, by the way. So we created a new all-time high. We hit that. We overcame all these levels. But if I draw an upside line like this, capturing the peaks, then this is exactly where we're getting a little hold up right now. So the thing is, my question is right now, is this going to be enough? Are we going to see like a hold up here and then reversal back down? Obviously, it would be great to see that, but again, let's not rush into things, okay? I mean, this is something that we're going through in history. There is still demand in silver, but I think, in my opinion, we need to, maybe see a little bit of a bit more bearishness coming into the whole AI story, because look, silver is used in computing, right? I mean, a lot, and it's a good semiconductor, and you know, it's used not only there, of course, in medical equipment, you know, in jewelry and dental. So it does have demand, but at the moment the big demand is coming from the whole technology sector. But if we suddenly see a little bit of a twist in that technology sector, that's when the interesting bit comes in, and we could see a little bit of a retrace, a little bit of profit taking. So for now, keep on monitoring this. We could see some spikes here and there, but take everything with a pinch of salt. This is the third time we're seeing such a parabolic move, and I don't know if the third time is going to be like different, where it's just going to continue going higher. It could, but eventually it has to retrace back down. So is this going to be the moment? Let's wait and see. Very quickly on platinum, similar story, big jump, there we go. Palladium as well. Now we're seeing a little bit of retracement. Look, with Palladium, I talked about this and I said, ladies and gentlemen, watch this breakout near the 1,250. I mean, it was forming a double bottom here, you know, the neckline here. So everything was kind of really pointing towards the upside, and there we go, we got the move, and congratulations to those who captured it. I called it out several times and it worked out like a charm. Let's now, at this point, I would say I want to see a little bit of a retracement, to be honest, here back to maybe these EMAs here, the 100, the 50 on my monthly chart, and then we'll just take it from there. Copper, quick update, good result here in 1,000, you know, and also seeing a little bit of retracement. That's fine. This is a monthly chart, by the way. I'll jump into the daily. Oof, look at the pin. Oh my god, look at the shooting star here. Yeah, possible reversal. Let's see if this is going to work out or not, but a little bit of retracement back down could be possible. And let's say if I'm going to measure, be a little bit more moderate, then there we go. We did already the 23.6. If I'm going to measure this one, I mean, the next target here, based on this measurement, 38.2, which is around the 978 zone. But if we captured this little move here, okay, 987, I think that could be doable. Wait, 987, 978, okay, just the opposite number. Okay, so good potential target here, somewhere around here, 987. I think that could be doable. So let's see if we can reach that one. And very quickly on sugar, we drifted back below this hurdle, this 16.69, but we still remain above the 50-day EMA. So in a way, there is a chance for a rebound. However, I will remove this barrier, no longer needed. Now I'm going to watch this little hurdle, the 16 zone, 1605. 16.05, and if we do drop below that, I'm going to consider a move lower. Soybeans, still waiting for the two top leaders to meet, the top leaders of the two top economies to meet, and they're going to be talking soybeans in there a lot. So keep your eyes on this one. Oil, there we go. I'm gonna continue being bearish. Look, I mean, look at this 61.5 zone. We're watching this one again. If we do drop once again below that, I'm continuing to aim for that $60 mark, or even below, maybe even 55, going all the way here. I'm not really positive on gold unless it starts breaking my downside lines right here, but yep, at the moment I'm not seeing that, to be honest, and I don't know if I'm going to see it for now. Brent, similar story. Yep, near key support, near $65 mark. Let's see if we can drop and stay below it. Natural gas, very quickly dropping very quickly to the downside, but we're around my EMAs, so I'm not really getting comfortable with the downside yet unless we clear all my EMAs here on the daily chart, and then yeah, I'll go for lower levels. And finally, for dessert, cryptos. Bitcoin, yep, there we go, retracing. We did that nice move here, the 23.6. We hit a new all-time high. That's fine. We hit the new all-time high, and that's 126,230. And yep, now we're seeing a little bit of a further move down. 38.2 almost. Actually, we can take that. We didn't reach that, so the question is now, can we go for a larger correction back down? So I will remove the Fibonacci. I think it's Yeah. Oh, we did reach the 38.2. This is just the way I drew it. I didn't drew it correctly. So there we go. We reached the 38.2. Okay. Now at this time, I think the next target is the 50%, which kind of almost coincides with the high of the 18th of September, or should I say the highest point of September. It's a good target near the 117,630. I basically remember I talked about this 118 zone. I think that's my level. That's the target, and I'm keeping an eye on. So good potential area for a test again. If it holds, rebound, push higher. If it doesn't hold, well, we could consider a move to the downside. But let me get rid of the Fibonacci. I think let's just stick to this clear, neat picture. Bitcoin Cash, look, 600. It just cannot deal with that. It just cannot stay above that. So that's my kind of indication of some weakness. And I will say this way, if Bitcoin Cash remains below that 600 zone, honestly, I am just gonna stick to my downside scenario here in the short run. Ripple very quickly. Ripple is pushing back down, fell back below that psychological 3 level. So I'm not saying that I'm gonna get very bearish here, but what I'm looking at here is this key area of support near the 2.69 zone. And if we are, examining a possible, if we're examining a possible downside scenario, well, it kind of confirms this. This bearish this descending triangle pattern kind of confirms this idea. But if you want to be a little bit more on the careful side, then yes, a break below this key area of support here is required. At the same time, if it can fall below the 200-day EMA, great, more sellers here could join in. Ethereum very quickly, dropping, but holding still above my 50-day EMA shown as the green line. So if we do stay above it, then yes, I will continue targeting the upside. However, I would need better confirmation, maybe a break back above this downside line. I'm not going to get rid of it yet. I mean, we did it did provide some some support, some resistance. We did kind of violate it a little bit here on this week. You can see we created a false breakout, so that's why I'm keeping it on the chart for now, at least until the end of this week. Maybe next week I'm going to redraw it and basically mark this key area of resistance right here, which, as you can see, 4,750 zone, not exactly the level 50 zone, is the one that I'm watching very carefully here. If you're looking for some downside, I think this could be an option here. Not this one, sorry. This area, I think it's not going to be the level. Yeah, it's going to be this area right here. This is what I'm going to keep an eye on. And if we do clear this zone, like I said, I don't have a specific level here. And normally I always have an area, but this one's a very clear area of support. If we do drop below it, then yes, this is roughly between 4,000, kind of 235, 75 levels, something like that. Yeah, if we clear that, we could aim for slightly lower levels. Litecoin very quickly. Oh, Litecoin is exploding. There we go. Look at this. Boom, to the upside here. So for Litecoin, if there isn't news, I don't know. I actually don't know what the news is, but maybe there is a viewer who knows what the news is about this. Please drop it in the comments. I would love to know. Maybe I've missed something here, but Litecoin, yes, beautifully moving to the upside. The question is now if we can actually continue that rally. But for that, I would, if you missed this move, that's fine, don't worry. What I'm going to do here is I'm going to wait until we see a hit of this 134 territory. If we hit that 134 and we stall near it, okay, I'm going to keep an eye on it first, but if we do clear it, I will go for some slightly higher levels. Dogecoin, look, I've drawn this rising wedge pattern. It's a bearish indication, but I need a clearance of the lower side. That's theory, period. If we can get a clearance of that lower side, I will go lower. But while we remain inside the pattern, there is still a chance for the upside. Polkadot is flirting with that 4 level, and it's struggling with that 4 level, and I think it's going to continue oscillating around that 4 level, and basically that's my game plan right now. Look, but what's interesting here is that we dropped below that 1.08 zone and we're staying below it. So in a way, there is a good little chance of a further larger correction back down towards this little upside line here taken from the low. of the lowest point of July of this year. It's a tentative line, don't get me wrong. The reason I've drawn this one not from here is just because this one's capturing more bottoms here. It's a little bit of a better one, but hey, maybe we could redraw this. But again, for now, it's just like I said, it's just indicative. And finally, Tron. Drifting lower, but as I said to you before, my preferred downside scenario is on a break of the 0.33 territory, or even better, a drop below the 100-day EMA. If we can get that move, wonderful. More sellers here could join in. For the upside, I need to see a push back above this level, at least this 0.3474, and then we'll take it from there. Ladies and gentlemen, that is a wrap. Thank you very much for watching and listening. Thank you very much for watching and participating in my videos throughout the week. In general, please do like and subscribe. The usual, what we request, what we ask for, please. That would really help me out, certainly. And I hope you found it useful. I hope you found this session useful. And as always, look, I always welcome comments. We didn't get any comments and didn't get any messages today. But in general, if you thought of something, you can always leave a comment below the video, and I will get back to you in the next session, and we'll go from there. So, ladies and gentlemen, as always, stay safe, have your stop losses in place, risk only what you can afford to lose, don't overtrade, and everything will be fine. I shall see you next week on Monday, and please have a beautiful weekend. I'll see you on Monday. Bye-bye.